Hello, trading has closed on August 10th, 2022. Let's start with our disclaimer, go over our calls, and then make some predictions. It's my trading plan for tomorrow, August 11th, 2022. Remember, I can be completely wrong. Any trade you make should be at your own risk. We looked for the pattern with the early high, which is this. Tomorrow should have the early low. We get to cross a old target off the list, 41.44.13. We're close to an ultimate target from May 5th, 42.13.50. Ultimately, it should print. Doesn't have to be tomorrow, but we're close. Just remember there's resistance over the target. Resistance doesn't have to hold. This green line is the May announcement price, the May FOMC announcement price. And these prices of the FOMC announcement tend to offer good support and resistance even well into the future. Now, we said there should be a large gap at the open, which there clearly was. I said my indicators were leaning towards the gap being up, but there was an economic report coming out. I don't normally take trades before these reports. The report was received well, so we gapped up. Just remember, if it weren't received well, we could have dropped just as much. And it's really a question of whether you want to win the most or lose the least. There's a big economic report coming out tomorrow. I think it's the Producer Price Index. I'm not predicting we have a big move like this, but it certainly is possible any of these things come out. Anyone who has a position going into it has to be prepared for a big move, which won't always be in your direction. This is what we said. We said we should have a gap, smart gap at the open. Tomorrow has the early low. During the day, all these Fs are false moves. False means MEJT says they'll retrace, and they already have, so that's played out. Well, whenever we have a rally day like this, I want to see a close over intraday highs. Well, that's the close, and we closed over intraday highs, so that's what I want to see. But let's see how the situation was within the last 5 minutes. Within the last 5 minutes, we were under all the intraday highs, and that's not good because we broke through at a time when big money wasn't participating. Big money isn't going to wait till the last 5 minutes of the day to close over all these highs. As far as I'm concerned, I need to be convinced that this is the real thing by tomorrow's open. I mean, if we open up here, it's the real thing, but if we open down here, it's just a false move. We're not going to know that until the open. For now, at least, the jury's out, and I'm still counting this a negative pattern, which can be invalidated if we follow through tomorrow, which I'm not saying is impossible. Well, I've been waiting for two things here. I've been waiting for a third wave, which can be counted as a 5-wave pattern and which has a Fibonacci relationship to wave 1. And now I have each of those things. That's 61.8, that's 100. This line I've drawn before, it's 42.13.50. It's the MEJT target. So we have Fibonacci resistance around here, MEJT resistance around here, and we have what could be an invalid break over these intraday highs around here. So that's resistance. Resistance doesn't have to hold, and if we gap up smartly, go higher, you've overcome resistance. But if we don't, resistance could hold. Let's see if we can count the waves in this pattern. We've had this before, and yesterday went over an ABC for the fourth wave. So now we have to find a way, if this is the right count, we have to find a way to count these waves up. Well, that sure looks like a wave 3, but how do you count this business? There's no 5-wave structure here. They're all 3-wave structures. Well, if that's wave 4, you can count this as 1 and this is 2. You can sure count this as 3, and that's a 4. And one way to count it is if it's an ending diagonal triangle. When you have an ending diagonal triangle, they're all 3-wave structures, and there doesn't have to be a Fibonacci relationship with the earlier waves in the pattern. Now, wave E doesn't have to end here. We could go up a little bit, and it wouldn't kill anything. If we're way up here, I think the whole idea is wrong. But certainly it's one way to count the wave, so we have a candidate for the end of this leg at or just over today's high. Of course, it's possible the count's completely wrong too. That's always possible. Thursday's pattern has the early low. We could still gap up. Typically, it's a rally day with a high in the final hour. If it's weak instead, more weakness is to be expected in the days to come. We have Fibonacci and MEJT resistance at and just over today's high. In addition, intraday highs were not cleared during a relevant time frame, and the volatility index is given a Bollinger Band reversal sell signal, traded under its lower band and then went over it. None of this is enough to call a short-term top with any degree of certainty. It's especially true now because a significant economic report is coming out tomorrow. As was the case today, such reports can affect the market in ways I just can't predict with a sufficient degree of accuracy. Once again, it's whether you want to make the most or lose the least, especially when you're possibly standing in front of a freight train like this. That being said, the bullish picture would be clarified were we to gap up tomorrow and go meaningfully over today's high. There's resistance at today's high, and if it can't be cleared convincingly, the door to a decline's open, and if that is the end of wave 3, it could be quite a decline because all we have to do is stay over the top of wave 1, which is under 4,000. So tomorrow's pattern is the early low. It's usually a bullish pattern, and if we keep going higher, fine. But if we start out weak, this could be the end of wave 3 up, and we could have a significant drop before the advance continues. And that's today's call.